Hello and welcome to the Maxim Property Securities Fund monthly report for June 2013. I'm Winston Samet, Fund Manager of the Maxim Property Securities Fund. During June, the Federal Open Market Committee's hawkish assessment of the US economy prompted a sell-off on world equity markets, which were also affected by news of a liquidity squeeze in China. Locally, the RBA kept the cash rate on hold at 2.75% as the Australian dollar continued to fall, shedding 4.32 cents or 4.5% to end the month at 91.45 US cents. Over the month, the yield on 10-year bonds rose 41 basis points to 3.76%, while 90-day bank bills saw a nominal increase of 1 basis points to 2.79%. The S&P ASX 300 A-REIT accumulation index fell 1% in June, outperforming the broader equity market's fall of 2.3%. The index returned an impressive 24% for the 2013 financial year, outperforming the broader market by 1.2%. Retail A-REITs were the top performers in June, returning negative 0.3%, followed by commercial A-REITs down 0.6% and diversified A-REITs down 1%. Industrial A-REITs, which have offered the strongest returns in recent months, trailed the other sectors with a negative 5% return. During the month, Federation Centres sold half stakes in 6 of its assets for $602 million, while SCA Property Group successfully raised $90 million to fund the purchase of a $136 million portfolio of retail assets. Share buybacks are also a feature, with Westfield Group, Westfield Retail Trust and GPT the most active players in the market. The Maxim Property Securities Fund returned negative 0.44% in June, outperforming its benchmark, the A-REIT index, for the second consecutive month. Since inception, the fund has outperformed its benchmark index by 0.98%. Over the month, the fund's performance was enhanced by its underweight exposures to Westfield Group, Investor Office Fund and Goodman, which fell 0.7%, 6% and 3.2% respectively. The fund also benefited from its overweight exposure to Arden Leisure Group, which defied the market to deliver a 5% return. Investments in 360 Capital Industrial Fund and Multiplex Sites, which fell 5.2% and 1.9% respectively, plus an underweight exposure to Commonwealth Property Office Fund, which rose 3%, were negative contributors to the fund's performance. At the end of June, the fund's investments comprised 18 listed securities, representing 96.2% of the portfolio. Unlisted property investments accounted for 1.4%, with the balance of 2.4% held in cash and other liquid investments. We temporarily increased the number of listed securities in the portfolio to take advantage of the round of distributions in June. In the months ahead, Maxim expects the A-REIT sector to offer an attractive, competitive income stream and medium to long-term growth as investors to continue to privilege yield and strong fundamentals in a low-growth environment. While the slowdown in resources in the financial services sectors may push up commercial vacancy rates, low levels of supply will persist in the short to medium term. Despite warnings, demand for retail space remains sound as landlords continue to remix their centre offerings, shifting from low to mid-range fashion to more popular services such as restaurants. We hope you found this video report interesting and informative. If you have any questions or comments about the issues raised, please don't hesitate to contact us using the information on your screen.